2x your day trading results with just these 6 steps that I'm going to walk through. And proof this works, by the way, is because this is the same day trading psychology that I've specifically used in the past 4 videos to make basically that $15,000 in that single week. For the proof, here's a single video of me from last week actually walking through all the trades I took in detail, not holding back a single thing. And then there's the actual 3 additional live trades of trades I took additionally that show you the full strategy step by step by step. But from a deeper perspective, you can have a full strategy, but you do for sure need to understand behind all of it, how exactly can you actually make that money and sustain that money realistically long term. So first, psychology tip number 1 is you have to be able to overcome overtrading. So you have to think about this. Thinking that you should be able to trade 2 to 5x times a day is the reason why a lot of traders fail. Higher quality is much more important than high quantity. So you may be thinking that, okay, 2 trades a day is fine, Maurice. What's wrong with that? Well, you have to think about it. Who realistically has a higher probability of actually realistically winning more money, making more money? The person that takes 500 trades hypothetically in a month, or someone that hypothetically takes 50, right? If you have to do way much more, that means you have to be correct much more. I'd much be correct much less, so I can just make more money. That's how the logic game works when it comes to trading. And you may be thinking still, okay, that's cool, where you said 500, but I'm talking about 2. Can I just take 2 trades in a month, or sorry, in a day? That seems fine. Again, the best way for this to work is you to actually trade 1 time per day max, which typically means from a day trading perspective that you only have 20 to 22 days in a single month to make a trade. So you have 22 max trades that you can make in every single month, and that's it, right? So 22, whoops, that's a 3, geez. 22 is realistically all you need. If you do just 2 trades, that literally doubles it to 44, which is an insane amount of trades for you to be correct about, right? So you have to think about it, less is more in that aspect. Because there's a lot of people, when again, to go a little deeper into it, if you think about it, if you do 2 trades a day to get to the 44, then you need to find 2 high quality trades that you can potentially be correct about for 1, but then 2 that you can fully understand that you know that you can be correct about. Versus if you do 1 and maybe there's 2 trades in that day, you have a higher probability of saying, you know what, I can skip this single trade, screw that one. I'm just going to get this simpler trade here because this one makes sense to me. Or maybe 2 trades pop by and you're like, I don't feel comfortable with these. Oh wait, a third one might happen. I'm going to go ahead and go with the third one if this piece happens. The striking of trades that you don't have to do gives you the comfort to be able to do higher quality trades rather than that higher quantity. Because that's so much easier. And I'm telling you, if you're over trading, doing more than 1 trade a day, and you're wondering why you're not profitable, that's the reason. Out of all those trades you took, if you just could pick one where you jumped in and your heart wasn't beating so fast out of your chest because you were scared and terrified from it, if you didn't pick that trade, how would you feel from a psychology perspective? You'd feel much more comfortable. You feel much more happy. You shouldn't have to jump in a trade that you don't feel comfortable about. This is your money on the line. This is your family's future on the line. This makes absolutely 100% no sense for you to jump in on things that you're not comfortable with. So, that being said, if there's 1 trade that you need to take, find the 1 trade and that's what you need to take. And if I take a step deeper, right? If you really think about it, it makes, again, even further less sense for you basically to do day trading. I don't know where the fuck I was going to go with it. Damn it, I lost my train of thought. Damn, that was a good point though. Whatever. I rambled though. It's fine. Go back. 2x your day trading results with these 6 specific steps. And proof that this works is that these are the same exact psychology tips that I basically use in the past 4 videos for me to make $15,000 in the single week, basically, for last month. So the video here shows all the trades step by step that I actually did, and I walked through them from an analysis perspective. And I literally show you about with all those. No holding back, no like, hey, buy this course and junk like that. It's literally all there. Then these past 3 videos, here, and here are actually live day trades of me doing it and walking through my full analysis on how I even made $1,200, $1,800, $2,300 for the full strategy. And if you're wondering where's the full strategy, it's all here as well. So all the tools are here, but more important, let's go through the psychology piece, because without the psychology of how I actually was able to do these trades, nothing else mattered, right? So first things first, the way to actually get your results to be 2x, the way that things are, you need to stop over trading, because a lot of you all are over trading. A lot of you all think that you need to day trade 2 to 5 times daily because you think more is better. You think realistically the opposite of this following, which is you think, well, I believe that higher quality is more important than high quantity. Most people think the reverse, which is they think high quantity is more important than high quality. Being that, for me anyway, I like to tell people that the most amount of trades you need to take in a single month is 1 day trade a day, which is basically ends up to being 20 to 22 trades in a single month, right? Because if you take 2 trades a day, right, then that easily doubles it to 44. Let alone if you do 3 of them, right, that's 66. You do 4 of them, that's 88, right? We're just keeping with these numbers here, specifically 1, 2, 3, and 4. Who do you think has the higher probability of winning more trades, potentially? This person here? Sure, of course. They have higher quantity, so maybe, of course, they can win more trades. But when it comes to trading, wouldn't you much rather be able to be happier to say no to all these bad quality, potential scary, annoying, anxiety-inducing, crazy, psychotic trades and not take so many dang trades? And just take the ones where you jump in a trade, you feel happy, you feel content, you feel calm, you feel collected, you feel like you know for sure this is gonna work. And if you do that, it's like, hey, well, I can maybe be right about 18 out of these 22. Versus with this, you're like, okay, I have to be right 70 times for me to be able to actually make a whole bunch of money. Screw that. That's crazy talk. In a single month, times that by 12. Whoops, that's not a 2. Times that by 12. Times this by 12, hypothetically. And let me get my calculator out here, because I can't do that math in my head. 18 times 12 is, if I pull this out, 216 trades in a single year. This one is 70 times 12. It's 840 trades in a year. Who do you think is gonna be the crazy one out of the 2 people here? And who do you think will be more calm, collected, relaxed? It's going to be this person here. You don't need more trades. This is not the game. You need fewer trades, and just after a while, put more money in each trade, and then that volume from a financial perspective will go up, and you can make more money with this. That's the goal. And by the way, this is if you did 1 trade a day. Me and a lot of other students in the one-on-one coaching program, they do sometimes not even a trade a day. Sometimes they'll do a trade on Monday, skip Tuesday, and then maybe do Wednesday. So that's actually 0.5, which reduces this into 2. So 216 divided by 2 in this example is 108 trades in a single year. That's way better. Which this is, by the way, if you're curious, obviously, is 9. It makes to be right about it in a month. It makes things so much simpler. More is not better. Less is better in this scenario. Stop over trading. If you're wondering why you're not financially stable and financially killing it when it comes to trading, it's because you keep jumping in so many trades, and it's not the answer. But that's what I do. And you may be wondering, well, Maurice, how does this relate to this part here? Because in this example, right, I have multiple ways of making income, of course. This is not the only way I make income. But the 15K for the week of me doing these trades over here, right? After that, I was done. So this is 1 day. This is 2 days. This is 3 days. And then I showed here 2 other trades I did inside of that same week. So 3 days. And this is another one plus 2. So this is 5 trades. So I traded 5 days out of the 20 business days. This is even less than this in the first place. And you think you all are going to win by doing 20 out of the 20 or 60 out of the 20. You're doing too much. And you may be thinking, hey, well, I want to grow my account. Actually, I'm not going to go that path yet. But long story short, you don't grow your account by trading more. You grow your account by having a low amount of trades that you do. Not this low, right? I do this at this point just because of the income that I put in there. But having a low amount of trades, being one per day max. And then once a good quality trade comes up, take it. If it's a bad quality trade, do not take it. And that's it. And that's the first psychology piece that helped me easily work 5 days of the month from just trading, and then the rest of it I'm done and I can do things that I want to do, and that's it. That's why I can't post live trades every day of me doing all this stuff. I'm done. Y'all crazy if y'all don't work every day. I don't. I'm assuming you don't either. So that's part one. Part two, psychology tip that helped me is not trading 100% off of major zones and only instead taking risky minor zone trades. If you're familiar with my strategy that, again, I walk through in this video here fully, this video here is also 40 minutes long, and this basics video here of 20 minutes, then you'll understand that when it comes to minor, and if you're not, by the way, click the top right screen up here. It'll take you to a video, that beginning one that shows you the full strategy, which talks about this. But if you're trading off of minor zones because you know my strategy, that's one of the for sure reasons why you're actually losing trades. And if you're just from a quick FYI of what that is, when it comes to the charts, just draw something quick here. Let's say this is a chart and this is the day, right? Do it like this and it comes down. Okay, so this hypothetically is a major supply zone, and this hypothetically we'll just say is the major demand zone down here. The only time you should be taking a trade is once it comes back up, retest this, you take an option put to the downside, or if this breaks through, let's continue this line over here, breaks through, comes back, hypothetically, comes down for a put again, then boom, you take a put to the downside as well. Of course, you could take calls as well, so like, right, if this did come down, bounce up, and goes to the upside, then you have a call, but you only take things on the outer skirts of these zones. That's it. All this stuff in the middle area, all this, you ignore it. No one cares about it. That's a minor zone, basically. You saw like, hey, it's like, hey, it retested in this spot over here. If I have that, comes down, taps it, and goes back up. It's cool. It did a bounce. I don't care because it's in the middle of the zone. You don't want to be playing in the middle of the streets. You need to be playing on the sidewalks, basically on these side pieces over here, essentially. And that's it. So no minor zones, no trading in the middle, only the major zones being the ones on the outsides on that 5-minute chart specifically, because all the stuff on the inside is more risky. Sure, it can work, but you don't want risky. You want simple, easy money. If you want simple, easy money, it's major zones only. That's part number two for the psychology piece that helps you to be able to 2x your results. By doing minor zone trading, it will reduce it. You need to do major zone trading specifically. Part three is trading multiple strategies. So when it comes to my strategy, we have 1,003 video testimonials from people that did one-on-one coaching. We have me doing live trades. We have a free book that's 103 pages that shows the full strategy. We have hours and hours, I think about 100, 200 videos basically on YouTube that shows the full strategy. If you want to proof that the strategy works, it's all there. Test it yourself. That's fine, right? But if it's all there and you know for sure at this point that it works, my question back to a lot of you all, because I've seen a lot of your charts. I've analyzed thousands and thousands of charts from thousands and thousands of people at this point, and they still will, for some reason, have 2 strategies on their chart before mastering one. And it would make your progress of trading take so much longer. I just, as an example, analyzed someone's charts just literally before this video here. They were trading my strategy, but they also were trading another strategy, which included moving averages, which I'm not going to go through that, but moving averages and Fibonacci levels, but also my strategy. So in a way, they're kind of trading 3 things, basically. And it's like, well, that makes a little sense. You know what? I will draw something. So we'll go with this. Let's say, let's do it like this. Yeah, that'll work. Just like that. And boom. So let's say this is a major supply zone, and this over here is a major demand zone at the bottom. So the idea of how this should be is that, again, if it comes down, taps it, and runs up, you have a play to the upside. It comes up here, taps it, you have a play to the downside, vice versa. So what this person basically did is they saw this, they said it was a play to the upside, right? They said, okay, it's bouncing upward. I can hypothetically enter on an option call, this makes sense. But what they ended up doing was they sold over here at break even / a slight loss in this spot. And I'm like, wait, why did you do that? It doesn't make any sense. It literally went up. You could have made so much more money because you could have sold up here for profit, right? Entering here, exiting here. What happened? He's like, well, okay, so I did see that, Maurice. It jumped off of the major demand zone, but I had like these Fibonacci levels, which was like 25%, whatever, however the crap this works. That these little Fibonacci levels right here, and it basically hit kind of the middle of the fib levels, and because of that, I got scared. And I basically just exited. But also with a moving average, it seemed like I couldn't break above the moving average as well. And I'm like, wait, stop, hold on. This makes no sense. Why are you're using all these additional factors in place when in reality, if you just remove those, it literally went over here, went sideways, and then finally went up. You talked yourself out of making money because you're combining multiple things that should not be combined. Like, that's almost like I cannot draw worth anything. Jesus Christ, that's my cake. So let's say you had a birthday cake, or I had a birthday cake, and I'm thinking, you know what? I want to teach you how to make a beautiful red cake just like this. I don't even know what I'm doing here, but a beautiful red cake just like this, I guess. And I basically gave you the directions, told you everything. These are the ingredients. I'm like, if you follow this, you'll have a beautiful red cake just like this. Hopefully not as freaking ugly as this, but anyway. And you're like, cool, I'm going to do this cake exactly how you said, Maurice. But you know what, though? Since this is silly, I might as well add to this. I really like strips of bacon. You know what? Like, what if I add 2 strips of bacon, like, on the side piece right here that are, like, just sizzling? So I'll have, like, a little bit of a cold cake plus a hot piece of bacon. And you know what? I like grease, too. Like, what if I, like, the bacon grease of it, you can cook with different things. What if I add that inside of the cake here? Because everyone likes cake, but everyone likes bacon, so why not combine the two? It's like, in theory, I guess, I get what you're trying to say from a conceptual perspective, but in reality, that's disgusting. Let me know in the comment section below. Would you eat a bacon cake? Because that's the stupidest thing ever. But when you think about it, that's what all of you all are doing. You have VWAP trades that you're doing. You have MACD on the charts. You have volume on charts that's like a special volume that you're trying to specifically trade. You have 16 other indicators that you've tested out and traded, and they're still on there. You have 1,000 lines everywhere. That's what you're doing. You're literally the ones eating the birthday cake with bacon. Open your chart, pull it up, and show me. Or just think about it. Is your chart bare bone, basic, naked, being that there's only the 5-minute chart and there's only zones and the little lines for the zones, and that's it. Because that's how every single successful student through my one-on-one coaching program, that's what their charts look like. If it doesn't look like that, that's the reason why you're failing. You're trading multiple strategies. You're trying to make a bacon cake, and it's disgusting. But again, if you like bacon cakes, or if you Google it right now, let me know it's a thing. Let me know in the comment section below. But maybe I'm wrong. Maybe bacon cake's a thing. But that's the third reason why my trader psychology is able to be successful, because I don't try to add to things. And I'm already successful, and I still don't add to things. I don't care, right? I'm trying to make money. I'm not trying to be fancy. I'm not trying to make the next cool cake that's going to be on TV. I don't care. I'm trying to do a couple trades and then leave, and then I'm done for the whole month. I did 5 trades. Yeah, 5 trades for May, and I'm done. I'm not doing all the day trades in the world. I don't give a crap. So that's third point. If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long-term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up, so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1004, then go ahead and click the link in the description. where it says apply for coaching, and you can go ahead and get started. And now back to the video. Fourth point is chat room trading. So if you're in any chat room, or if you're in my chat room specifically that is not open to the public, by the way, a lot of people have an issue that they like taking the fancy trades that everyone in the chat room has basically also done. Again, I've already hit this point, so this one will be rather quick. You only need to take major zone trades, and that's it. If you already have a proven strategy, that's it. There's too many people in any chat room that they may go do this multiple strategy thing because they're already successful. Maybe that's just how their brain works. They like doing multiple things at multiple times. Then they post a chart. How many times does it happen? You've seen someone post a chart that says, hey, I'm trading Tesla doing this specific strategy. You're like, cool. Well, I'm not good at this strategy, even though it seems like it works. But you know what? I'm going to do your strategy. You're chasing the FOMO from the idea that you should be able to make it work because John Smith potentially made it work. When in reality, you need to focus on you. Focus on the major zone trades and nothing else. Too many people are following others because they think that the grass is greener on the other side. When in reality, you saw them take one successful trade. You don't know what the other 22, 92, 156 trades actually look like, because all of those could be red. Anyone can potentially lie when it comes to this stuff. That's one of the reasons I make my full strategy free, especially at this point. If you think the strategy doesn't work, you think it's a lie, go ahead and test it yourself. People ask all the time, oh, I want to see your I guess trading history and this and that. It's all there from a trading perspective. Test it yourself, because it's up to you to prove to yourself that it works. Nothing else. Doesn't matter. Trust comes from you internally, not from me showing you, because I can show you anything. If you're being realistic, all it can realistically be is a little Word document that I can make look fancy and make look real. And like, hey, look, I made $10 billion. And look, there's a little stamp from this specific company. You can just make it up. I can go to a chart also and just put anything on there. Oh, circle this and circle that. I made the money. It's all, you can fake it so hard, right? But you can't fake you doing it yourself. You can't fake, but they, again, so to go back to it, the chat rooms that any of you all are a part of, do not actually take trades that other people are doing. Don't follow the strategies from people that seem like maybe they're successful. Learn a strategy yourself, test it out yourself, and keep critiquing if you don't have a coach, and continue to improve upon it further and further and further and further. That's the point number 4. So, and since I just don't listen to other people. Next piece is a really big one, which is greed. Not taking profits when you should have, because nothing's wrong with exiting. Take profit, number 1. So someone mentioned, very interestingly enough, whoops, went too far back, is this piece, where was this video? I believe it was this one here, which was, I think it was the 1800 or so. Someone left a comment basically that said, wow, you jumped in a trade. Like, this is how crazy my trades are. This trade, one of the trades I did in here, I think it's for $1,200 versus out of the 800. Another trade came later. I basically jumped in, I did the trade, and the trade went exactly where I wanted to go versus for a pre-planned exit, but it just happened so quick. So I was in the trade, I made $1,200 in 40 seconds. But it kept going up after that. But I didn't care. It hit my TP1, which is a take profit 1, and I was done. What else is there? I mean, I made $1,200. Am I really going to be upset about it? I don't really care. But you may be thinking, well, that's because you made $1,200, Maurice. Well, even so, I put in about $10,000 to make $1,200. So it's about a 12% gain. So realistically, if you put in $100, you'd potentially earn $12. That's the same dang thing. From a marginal percent gain perspective, you made a great trade. But there's too many people like, I didn't make thousands of dollars, so I'm going to hold it and hold it and hold it. That's not how trading works. Take the profit when you got the profit and it hits your take profit 2. It does not need to hit TP3. I don't care. It doesn't need to even hit TP2. TP1, more often than not, is way, way, way more than enough. And it's all you realistically need. So take your profits off the table, because you don't make money until you click the sell button. You can be up as much as you want, but until you click sell, you don't have anything, because that greed is in the way for a lot of you all, because you can make a bunch of money more often than not, but you can also lose a bunch of money. And proof you can make a bunch of money is this: the simple thought process of this. When it comes to the stock market, I've said this thousands of times, it can only go up, down, or sideways. You have a 33% chance. So realistically, a monkey can make the same exact choices and they can basically win just as much as a lot of people. Because there's only 3 ways it can go. Sometimes, yeah, sure, it goes sideways a little bit and then it goes up. That's fine. Okay, it's fine. Right? But that really comes down to the greed piece. It's like, for me, let's say something did like this and then went up. And you may be thinking, okay, Maurice, you entered here and you exited, we'll just say over here. Oh, you made 6% of a gain, something like that. And you're like, man, Maurice, but you could have exited up here and for 50, 40% of gain. I don't care. This 6% is cool. Perfectly fine with me. 6% more than I had before. 6% more than you had before. That's the game. If I really want to re-enter, sure, I can maybe re-enter when it goes up here, but I already closed the computer, walked away, not doing a single dang thing else. Because again, the point of trading is to trade once a day and walk away. I don't want to, because here's another example, right? Let's say, it's a hypothetical, I entered here and I didn't exit, let's just say here. And I kept holding and holding and holding and holding. And this is a long time to potentially hold. And then it finally goes up. That's stressful. That's anxiety inducing. I've already went through these little terms here. I'm not doing all that. I'm not that greedy. I'm greedy in the long term because I want to be consistently profitable, but I'm not greedy in the short term because in the short term I want like safety, comfort, relaxation. Like those are the things that I want. Again, maybe I'm crazy, but the less is more philosophy is really a psychological piece that I basically go for. So greed will really kill you because let's just say, if I go over here, let's just say the trade did this like that. How many times have you ever jumped in this trade, jumped over here, and you're like, okay, I want to exit once it gets right here, right? And it goes sideways and sideways and sideways, and then it plummets. And you're sitting there like, man, I could have exited here and here for a win, and here for at least a slight win, and over here for a win. All these spots you could have exited. All these spots. And you stayed in trade. It's like for me, for what this says to me, if I draw it again, and then down, if you entered here, it's telling you multiple times, hey, I cannot, at this point in time, go higher than this. As a result, you should either get out or I'm going to dump and make you lose the trade. It gave you so many examples to get out the trade. And your greedy ass, excuse my language, but it's true, your greedy ass is sitting there thinking, I want to 5x everything that's going to the moon. That's the stupidest thing you can possibly ever think. Get the money and run. Because you were right on the direction from that micro perspective. But more importantly, from a macro perspective, you should be right enough from a micro perspective so then the macro, your account will grow. On the macro, you can trade less to earn more. That's the goal. That's it. But the final point is one of the best ones, I'll save the best for last, I believe so at least, is I was able to actually make that kind of money. And this is where you can actually 2x your day trading account, 2x your day trading results, with the final step, which is following the trend, but a lot of you all ignore the trend. Because a lot of you all don't trade with the trend. So when you think about it, if the market's going up, you should 100% only be taking calls. So if the market, like there's a lot of times, the market does this, right? This will be all day long. And then I'll have students or people or anybody, they'll say, well, okay, I jumped in here at lunchtime, basically, because I thought it was going to run down for an option put. What? Why? If it was going up, like, I don't know about you. If it looks like something's going up, I'm going to make the crazy, bold assumption that for another 5 minutes, it might probably run up, so maybe it can do an option call. Quit trying to capture the bottom. Quit trying to capture the reversals. If something's going up, follow the trend with an option call. Vice versa, if something's going down, follow the trend with an option put, right? This happens very much so where, it may be like you see a bottom piece here, and it goes over, it's a bad drawing, right? But it goes over, it kind of comes down, taps in the spot, and then falls. And you're like, cool, I can do an option put to the downside on this piece here. Or over here, right? It's like, it happens a lot. It goes up, comes down, comes back up, hits the zone, and then it flies back up. You got an option call in your hands for you to take the trade. follow the trend. That's the only, and that's the two, right? And the other one that we've probably already talked about, this day, basically, right? Where it's like, okay, it's going between the zones, so I can take an option put to the downside and sell here. And then over here, it's going to the upside. I could take an option call to the upside over here and then sell up here. Like if it's doing a range, trade within the range. You can do a call to the upside or put to the downside. If it's going downtrending, only look for option puts that day. If it's going for an uptrend, only do option calls that day. Trade with the trend. You can't ignore the trend, right? The way to not 2x your day trading results is completely ignoring the trend. You need to follow the trend. If the market's going up, 100% only should be taking calls. And these are 6 things that I actually typically show and teach people all the time. And you'll be very, very surprised. If you fix these 6 pieces here, your results typically will go between, sometimes you might be winning 30% of your trades. And this, realistically, will generally take you to winning 70% of all of your trades. And I'm not kidding with you. It all seems rather simplistic, but it is generally the biggest things that help people improve their win ratio and be able to 2x their day trading results in just these 6 steps.